All right. Well, you're tuning in to Financial Fitness Northwest live on 1150 KKNW, where we're here to help you navigate the mortgage and real estate market with expert advice from knowledgeable and trustworthy industry professionals. And right now, that's us.
Welcome us.
Welcome us to the show. So I wanted to just give you guys a little background about Patricia and I and on our mortgage lending experience. Patricia and I have a combined 22 years experience in lending. We're both senior loan officers at Caliber Home Loans. We have a consultative approach to lending, recognizing our clients' needs to find the right mortgage solution and educate them throughout the process, which is far more complicated than it was just a few years ago. We truly love helping people, whether you're a first-time home buyer, a move-up buyer, purchasing your dream home. We love to help, and we've had the privilege to work with thousands of families to assist them in the financing of their home purchase or refinance. So we are a resource for you with any questions. And right now, we're going to kind of touch base on what are we going to talk about, Mom?
Well, we thought it would be good to just sort of take it back to, the first-time home buyer, but like Sarah said,
Really
there
any
are
buyer.
a lot of changes in the industry. And so if you haven't bought a home in the last 5 or 10 years, things have changed quite a bit. So it's good to understand, the disclosures, how they've changed, and what you should expect from your lender if you
Right.
are in the process of purchasing.
So first off, deciding on a lender. Mom, do you want to talk about what's the difference between, like, when you're going out to start, pick a lender, what's the difference between, like, us, a mortgage, a more private mortgage company, and, like a bank or credit union?
Well, I like to tell my customers that really the biggest difference is that we do mortgage. That is our core competency, and so we do it really well. When you go to, a lot of people think, oh, well, I bank with, XYZ. I won't name banks. Bank X, big bank. That's where I have my checking and savings. Well, though big banks, they do checking and savings and money markets, and, maybe that's a good place to go get your auto loan. But it doesn't necessarily mean that they are a good mortgage company. So it's really good to consider that. Also, you've all heard the old term banker's hours. Sometimes when you're working with a big bank, you're dealing with banking hours, and the difficult part of that is that most of the important time frames in the real estate market when you're purchasing are many times in the evening, on the weekends. People are out shopping on the weekends and viewing properties, and they're making offers on the weekends. So it's important to be able to work with a loan officer from a mortgage company such as Caliber Home Loans, the Riley Johnson team, because we are available on the weekend when you need us to get a pre-approval letter out so you can make your offer.
Right. And also, the difference between us and that I like to mention too to people is with a bank, their processes are, not streamlined like ours is. All of our processing and underwriting is local in our office. All we do is mortgage or mortgage experts versus a bank where, it's probably your loan's probably getting sent to Texas. There's a lot of people touching the file. The loan officer doesn't really have necessarily a lot of control over what's going on. And they have a lot of limited products available. So versus a privately owned mortgage company usually has more options available to you. So,
Exactly.
And all they do is mortgages, like what you said.
Mm-hmm. So the other piece of that we should probably just mention is as you're not only shopping for a lender, but some people want to call up and say, what's your rate? And, in this market and really in any market, the rate is not that important. It is important to be working with someone that is competitive for sure, but there's so much more that goes into a mortgage, and meeting a closing date is incredibly important in this market. So you want to have somebody first and foremost that can close your loan on time, but also be able to offer you the products necessary to meet your goals and needs that you have for your purchase.
Yeah, absolutely. And I think there's this kind of stigma, about rate shopping. And I see like these millennials going out to buy their first home, and their parents who bought home maybe, 10, 15 years ago. And they're like, you got to shop rates. You got to talk to a bunch of lenders. Well, that's really not the case anymore. We're so governmentally regulated. All of our pricing hits are determined by Fannie and Freddie if you're doing conforming loan. And so rates just only vary, but really an eighth between lender to lender. There's not this huge swing in interest rates like there used to be because where you can only make X amount of money on loans. It's just it's governmentally regulated. So you're not really rate shopping when you're talking to lenders. You're looking to find a lender that's going to be, advocating for your best interest, offering you products that are competitive and meet your financial goals.
Yeah, exactly. That's really where it comes down to. And like I say, closing on time. And
Huge.
Back to the big banks, it's sometimes difficult because they are large. They may not be able to get things done quite as quickly as a company such as ours, where we have all of our processing, underwriting, funding happens right in our office. So it's all very much under our control.
Right. And so the next step, you're meeting with these lenders is to get pre-approved. And so let's talk a little bit about what pre-approval means, because I think a lot of people think, oh, I'm just going to, give you some information and you can let me know what do I qualify for? Well, there's pre-qual. People used to use that lingo, which I think is out. Really, there's no such thing as pre-qual. You're either pre-approved or you're not.
Exactly.
Right.
Or you're not.
Or you're not.
And that means that you have sat down with Sarah and I, you've given your full loan application, you've provided your income information, you've provided your assets showing your funds to close, and we can give you a full pre-approval. And that is going to carry the most weight and allow you to win the bid when you're out there looking for a house. And it also really helps, especially with first-time buyers, to go through that process before you begin looking, because you want to make sure that you are looking at homes that are actually within the purchase price and payment that you want to make. And
exactly.
Don't go out and get your sights set really high on something that, you might be disappointed because you can't really do that. So
right. And also getting all of that information up front, which we do. We just unbury any issue that could possibly arise initially so that when you're out house shopping, there's no question. There's nothing to worry about. Once you buy a property, your loan has to go to underwriting, but we've already solved all the problems,
exactly.
if there is any.
Yeah. And it puts you in a much stronger position, too, because you can do a shorter close because you've already done all the upfront work. So,
yep. So we talked about that. Getting pre-approved is the first step, really, and in the process. And actually, even if you're a year out, I think talking to a lender and getting your ducks in order, I mean, it's the first step in planning to buy even in the future.
It is, and especially if you have any credit concerns or any credit, events in your past, it's really good to do it in advance of being really ready to buy, because then we have a chance to help you with your credit, get your score up a little bit if it needs to be, or advise you on what your next steps should be to prepare for purchasing.
Right. And then, so you're pre-approved. We've done the documentation. We've gotten it all up front. A lot of the nice thing about Caliber Home Loans is that we have the ultimate home buying experience. So a lot of times our clients can do everything electronically. We don't need nearly the documentation that other lenders do.
Yeah, it is so cool.
You literally have to sign one form and do an online account verification, but we don't ask for pay stubs, W-2s. It's not for every client, but we always take the path of least resistance first, and then if additional things are needed, they could be asked for. Worst case scenario, you're self-employed. We're going to need full tax returns for that, business and personal. But we ask for all those things up front, so you know what you're getting yourself into.
So you've gotten pre-approved, and you're going to start shopping. But what should you do and not do during that time period?
I would not spend your down payment.
That's a good one. Yeah. Keep it saved.
Try not to move too much money around.
Yeah.
It's easily documented, but whatever money is deposited into your account that is not from payroll has to be documented. So if you go on a vacation with your buddies and they pay you for half the hotel, we literally have to document that amount of money. So where it came from, source it. So it could be a simple transfer between your savings and checking. That's no big deal. But just know that those little things lead us to have to ask you for more items.
If you want it to be easy, then just keep all your money where it is in the account and don't move it around.
And don't close your accounts either.
Don't close your accounts. And don't go buy a car.
Oh, yeah, don't do that either.
Because that's not good. Especially like I had a person once that was going to refinance, and they were all pre-approved. I mean, we had the loan done. We were just working to closing. And then when you go to closing, you have to sign this little disclosure that says nothing's changed. You haven't obtained any new credit. Well, they went and bought a car because they were going to save $300 a month, and they spent the $300 they were saving before we even got the loan closed. And so then we had to go back, and luckily they still did qualify, but
it could break the loan.
It could break your deal. So don't do that.
Yeah, don't apply for anything. I mean, you can use the credit cards that you already have. You have to qualify with the monthly payment, but don't make any huge purchases.
Nothing that requires a credit inquiry.
Right. Don't be taking out a new Best Buy card for your new flat screen for your house.
Yeah, don't
because
do that.
We then have to document all that. So those are don'ts. Also don't quit your job if your employment changes.
Yeah.
That's a big one.
And I guess I would just say, if you have any questions, just talk to your lender before you make a move. That's always best.
Yes, absolutely. And we can guide you and give you advice. I just had somebody, just a couple weeks ago said, can I buy a fridge now?
Yeah.
And I said, yeah, you can. Go ahead.
Yeah, get your fridge.
Just check in with your lender first. And then the next step is choosing your real estate agent.
Yes. So a lot of times, clients will come to us. They've already have a real estate agent, and then they're coming to us to get pre-approved. But I like to say, if you're out there and you're thinking about it, get your financing in order. And we certainly have an option to help you with a agent referral. We know a lot of agents. We know agents in different geographical locations. We know agents that specialize in different types of properties. So we can definitely help guide you to someone that would be really well suited to you.
Yes, and really experienced. It's not always the best bet to go with, a friend of a friend or, someone on Facebook. You really want to make sure, as your lender and as your agent, that you're picking someone that's really qualified in this market. It's important. So asking them the right questions, just like your lender. I would ask your lender and your agent, how many deals have they done? How long have they been in the industry? What is their experience?
Yeah, exactly. I mean, if you meet some agent that you want to work with, and they work at Costco and then they just do real estate part-time on the side, it might not be the best situation, because you want someone that is full-time, that is serious about their business and definitely has the experience. And it's so important because they can really protect you. I mean, bad things can happen when you're not with someone that knows what they're doing.
And they can cost you a lot of money too.
Yeah.
Yeah. But on both sides, lender and agent.
Lender and agent, for sure.
So what to expect, the next thing is when you found a house, you got your agent, you found your house, then you have an inspection and appraisal. What's the difference?
Well, yeah, that's a really good point. So a lot of people don't really understand the difference of the two. But an inspection is something you're going to do once you're in contract. Sometimes people will do pre-inspections in this market as well. But that is an inspection of the home. The inspector is someone that you hire, and they do a full evaluation of the home to make sure that there are not any issues with the home, with the foundation, with the roof, all the aspects of the home. That is an item that's really important to do, especially on a resale property, and it's something that you, as the buyer, are responsible for. It does not really have anything to do with your actual financing. It can come into play as far as if there are repairs. It's a good negotiating tool, but it's something you pay for up front, and that's money that you're going to spend regardless if the deal goes through.
Right. And then the appraisal is once you have had the inspection done, you have moved forward and accepted the inspection, then you would order the appraisal, which is also a cost to you, but it's part of your closing costs. It's part of financing, and that's where they go out and assess the value of the home. Generally, the value comes in at the purchase price or close to. Depends on, this market is a little bit crazy in where you're buying. If you're like way over asking, there's things that can come into play there, but the appraisal is to assess the value of the home.
Yes. It's the collateral that your loan is being given to you against. So the lender needs to review the collateral and make sure that it is sufficient for the amount of money that you're borrowing to buy it.
And something to note on appraisals is that they're not the lender has nothing to do with the appraisal. It is ordered through a third-party system. We have no contact with the appraiser or anything, and they have their own rules that they're held to and calculations to where they come up with the value of the property.
Exactly. Yes, those rules changed some years ago, and so obviously it used to be a lot different, but now we have absolutely no contact. So that is definitely something we do not have control over value, which is the way it should be.
It is the way it should be. So we have so many more things. I kind of feel like we should stop here and call this part 1, and then we could do another segment, part 2, where we go into disclosures and forms, because there's so much to cover. This is why you need to meet with a lender. There is so much to cover, right? What do you think?
Absolutely.
Sound good? Okay. So we're going to go to commercial. When we come back, we are going to have the market update. I was like, we just did the market update. We did not do the market update yet. We are going to have that when we come back. We're going to tell you 3 reasons why this housing market is not a bubble. So thank you guys for tuning in to Financial Fitness Northwest. You can find out about any topics discussed on today's show online at www.financialfitnessnw.com.